everyone. I'll say I was pretty pleasantly surprised when I saw product management come through for a CFA event. It was definitely not kind of a standard career path when I got into it, started the CFA program. So me, I have a little over 14 years of experience here locally. I worked at RBC, I worked at Parametric, I worked at Columbia Threadneedle, I worked at Ameriprise. I got into product management. When I got into it, it was about 4 or 5 years into my career, and it was about the time when I started the CFA program. I think what I've seen more recently is there's definitely been an expansion and growth of product management teams. So I think there is more opportunity to get into product management at an entry level or early career, opportunity. So I started the CFA program 4 or 5 years after I was out of college, and I thought the biggest benefit outside of the curriculum itself, especially as I was getting into a product management role that I got from the program, was really establishing that credibility with the investment team. It's definitely a non-traditional path, I think, within investments to do something more on the business side. And I think the one area where you immediately connect with the investment folks is that CFA, because you do find it as a primary credential that you find within the investment teams. So let me make sure I don't say anything else. So yeah, maybe we'll go to the next slide. So the way I wanted to just kind of at a high level kind of break out, the 2 key areas within product management. I look at it as you have product management, you have product development. So product management, think of that as all the work around existing products. Product development is going to be more of the work around creating new products as well as evolving the product lineup at your firm. At different firms, you're going to see a different setup. Not every firm has these 2 functions broken out. Some will just have a singular product management department where you are functioning in both these capacities. And then, the other thing I'd say is that everything you'll see and you'll hear about from us today, all these responsibilities, they exist at every firm. So there's firms that maybe don't have a product manager role or a product management department, but all these responsibilities and functions are being done even at the smallest shop with maybe one investment strategy, one product. So just think about that and keep that in mind, as we go through today, is that if what you hear today really interests you and something that you want to do, you can find this capacity at it. So just kind of go through a few things on the list. So on the product management side, some of the key day-to-day, this is a day in the life. So the day-to-day responsibilities are being that product subject matter expert. I think that if you compare to the different roles, you sort of have the investment side where their responsibility is buying stock and bonds or investing in derivatives, whatever the investment strategy has exposure to. And then you have folks out in the field engaging directly with clients. So if you have investments, you have sort of sales, distribution, and where product sits is kind of in the middle of those 2 groups often. So you're working on bringing the investment product, the investment capability of the firm that the folks that are on the investment side are doing out to the market through that sales channel. So if you think about the person in the investment team, they're focused strictly on the underlying investments, the stocks and bonds. And you think about the salesperson, they're kind of thinking about the breadth of the offerings of the firm, and in that aspect, they're sort of tasked with being a mile wide and sort of more an inch deep with all the product offerings. So where you come in as in the product management role as being that subject matter expert, where you're going to cover a smaller set of product, but you're sort of an inch wide that way and a mile deep in terms of your knowledge around the products that you're responsible for. And I think that's where having a background with CFA really helps, not only in credibility but in understanding the knowledge. To have the depth of knowledge around the investment products that you cover, I think that, at least from my experience, and if you all go through the program, you'll see it, is that the the curriculum that the CFA offers really helps in understanding the investment products of the firm and what the folks in the investment side are doing, and then also helping communicate that out to the sales folks as you're building relationships in the market. So in addition to that, I mean, it involves also, product positioning, so that's just communicating the investment process, communicating, sort of how the product's performing, product training, so that's sort of getting everyone internally educated around the, what the product's doing, the process, performance, the people, philosophy. And, I think the last thing I'd mention here that's kind of neat is that, since you are that product expert, you do often still participate in investment team meetings and investment committee meetings, so you are very integrated with the investment side, and then your role is taking the information you get from that exposure to those meetings out when you're engaging with the sales folks as they're coming with more information on the products. On the development side, that could be anything from if your firm has a budget to build product, your help manage that pipeline, that business plan. And if I were to the way I think about it is on the product management side, you're doing a little bit more on competitive intelligence, so understanding how you compete with your competitors. And on the product development side is where you spend more time on market intelligence. So what are the trends in the marketplace? What are clients investing in? What product development is going on that you need to be aware of with competitors? Or as Marc mentioned, ESG has been a trend. And so think about how your firm is integrating with a concept like that. So in addition to that business plan, it could be product and vehicle launches, and the projects associated with those. You could have any type of role when you're working on those projects. It could be anything from just that subject matter expert to at some firms or in some series you are leading that project when you're tasked with sort of, hey, we're going to launch this product, and as product manager, you're going to lead that effort. And I think that's where it's neat in the role is when you get an opportunity like that, you truly work across the entire organization. And I think that's where it is different than investments role where you're really focused on just investing in stocks and bonds. When you're in business role like product management, you do work across the entire organization. You're working with investment sales, marketing, you do work with senior leadership a lot. It's definitely a good fit. And then change. So for existing products, something else that you get involved in is evolving those products. It could be anything from evolving the investment guidelines, modifying the pricing. There can be anything that you might be getting feedback from the market that the team is too small, or they're not understanding how you sort of structure the process when you kind of revisit being more specific around how we do what we do, and helping evolve those things is also something that product gets involved in. So I'll stop there before I get to the next slide. I forgot to mention, if you do have questions, and this is a little bit more fun, you do a little Q&A, so feel free to chime in at any time. That was my offer to you. We can go to the next. So this, I just wanted to, take it to another level just because it is day in the life. And this is sort of a level below where when you're in the role, what you're thinking about on a day-to-day basis, and what you're doing on a day-to-day basis is often tied to the product life cycle. So, I kind of think about it, there's three areas of the cycle that the products go through. You have inception, so that's the beginning of launching a product. You have sort of the seasoning point where it gets through certain gates or meets certain markers where it becomes more marketable or something that you actually can more easily deliver to the marketplace. And then we get to close, and close can be kind of three main things. Some investment strategies reach a point of capacity, so you get so many dollars in that you no longer have room to take on more investors. You can find a point where maybe you have two investment products that are very similar, and you don't want that redundancy, and you're looking to merge those two products. So in that instance, one can close. And then you do get get to a point where maybe you need to move on, that would be a liquidating scenario. I can talk about the other two a little bit more, but going back to the previous slide, you think about product management, product development. Product development is going to reside more on the inception and the close side. So that's where you're either developing a product or working on a project, or sort of development with senior management on the closure side as to managing capacities, mergers, and liquidations. Product management is going to reside in the season portion. So think about if you want to look at season, it's where you have a multiple-year track record, you have some performance you can present to the marketplace, you have assets in the product that allow it to get past certain gates of investor limitations within the investment assets and the strategy. You've seen the process evolve to a point that it's a mature story. You kind of here's what we plan on doing, and then now we've seen it. We've actually seen it work, and now we're ready to communicate that out to clients. So I think some of the exciting things you're doing there is you're working on a go-to-market strategy. So you look at a product and say it's seasoned, it's ready to go, it's ready for prime time. How do we bring this product to the market? How do we more actively engage with clients to show them our capability and get them invested with us? And then around that, you're working on things like marketing, content, you're working on thought leadership, and you're working directly with the sales folks on a sales plan. Once you get to the seasoning point, there's going to be goals. The whole idea within the investment business is you bring a good capability to the market and you look to grow that to create revenue for your firm. And that's where you're really able to do that at the season point. On the inception side, that could be something where at the very early stage, the firm says we need more product. We have capabilities. We need to bring more of that capability out to the market. That could be anything from looking at narrowing or broadening a certain strategy or capability. And that, think of it like if you're managing a mid-cap equity strategy, well, maybe you can take that process and do it within small cap. Or if you're thinking about on the bond side, you might be doing something that's broad duration, and maybe you want to take a subset of that and do just a long duration version or a short duration version. So that's sort of the evolution as you look at the capabilities and how you can bring a bigger product set, so bring more of your capability out to the market to meet their needs. And then some other kind of no less exciting, but more basic things is just working on a vehicle strategy. So you guys might be aware of mutual funds. Beyond that, you have separate accounts. So you mentioned individual account for a large institution. There's also some vehicles in between that work really well with a variety of clients. So having that vehicle strategy is actually something that you do at the inception period, but you also get involved in that in the season period potentially as well. And then pricing strategy. I mean, that's where you have sort of balance between competitive intelligence and market intelligence. And I think last, I was just going to say, before I go on, Kristine, I don't know how we do it on time. Kind of taking a lot of air, no questions. Why, if you're a CFA, might this make sense to you? I mean, for me, it's, I think the one reason I think it sticks out the most is if you have a passion for investments, but maybe you don't feel like you're somebody who wants to buy stocks and buy bonds, I think that product management is a great career path. When I look at the roles that are business roles, so you got sort of people investing and then everyone else, call it. Product sits closest to investments, right? So you are deeply knowledgeable about the underlying investments of the investment strategy, the positioning, the process, the story, and you often are very connected with those teams. You get direct exposure to the investment teams that you work with. So I think that's something to think about if you want to, how this might be a path for you. I think I have one other. Oh yeah, and then the other thing I've seen in product is that now that these teams have expanded, you see more people being able to get into this career path at an earlier stage. Because it can often be a path to a lot of other areas. So product management can be a career path in and of itself, all the way through the high senior level. But I've also seen a lot of people go into sales roles. I've seen people go into, I'm not sure if you're familiar with the CPM role, so a client portfolio manager role. And other sort of business-related roles. So it's because you work across your organization more than I think any other role. You're going to get good exposure, and I think even if you're going to have exposure to the investment team. So maybe if later in the game you decide maybe that is a route that you want to go on, I'm not saying that's not potential as well. So there's a lot of good exposure, a lot of different routes you can take, and this is a route in itself that you can take as well. So that's kind of what I got prepared. Any questions at that point? Yes.
So I thought I'd chime in. So you bumped around from a lot of different firms. How do you kind of see like the whole product mix kind of like changing between those two? And like what was your favorite organization to work with?
Oh.
I
have to answer that. All right, so the question is, let me get it right. So is it, how do I see the different product mix at different firms? Is that right?
Yeah.
I mean, I think that it's interesting. I mean, if I compare sort of, if I can name names, RBC, Parametric, and Columbia Threadneedle, I think those are organizations. It really is how they evolve and sort of how their strategy and evolving is. Parametric and Columbia had done some acquisition. Parametric did one bigger acquisition. Columbia does quite a bit of acquiring. RBC felt like more of a lived out. Sorry, I'm processing this long. You kind of have the shops who want to do everything and then want to do maybe something more specific really well. And I'd say Columbia Threadneedle has more of an ambition to do it all. And I think that's their goal, is to evolve and try to stay competitive in almost every area, other than they don't really care as much about passive. So they're an active shop, looking to be competitive in active product, whether it's bond, stock, derivatives, and they look to do it all. I'd say Parametric, you see more of a, here's our DNA, and we don't want to move too far beyond that. So those to me are the kind of two ends of the spectrum that you see at different shops. I think some of the boutiques you see here locally will run, we run small and mid-cap equity, and that's what we do in this strategy. And their goal is to really get those strategies to capacity. So they want to fill them up. They say our small cap can run $2 billion, and we want to get there, and that's our ambition. And I think so. It's really around ambition, I would say, as a firm, where you see the products. Does that answer it? All right. You can ask a follow-up. Any other questions?
How do you deal with the interaction between the investment teams when the PMs probably feel like they own a product or it's their baby? I mean, there must be some kind of inherent tension there between the product manager choosing when something is not going to be filled or it's time to fill in, or decisions that the PM thinks are theirs to make.
Yeah, I think that's why the role's been more formalized recently, over the years. I think that was always before, at least what I've seen, I don't know if you feel the same, is that it was where there weren't product management teams called out. It's hard for some senior leader to say to an investment team, hey, we're going to shut down this product, or we need to, evolve it in this way or that way. Where now that at least my experience being on actually called out product management teams by name is that you do get more credibility because when the role's established, the team's established, the mandate is established. So, I think that where it becomes more challenging is the firms that are still earlier in embracing that function. as a formal function, and are still wanting to gravitate towards the old way, where they could push back or make it a really difficult situation to make some of those changes.
I think it depends a lot on the firms too, because product management owns the product, the portfolio manager is an advisor that we have hired and can replace. So some firms, it's very clear, this is our product and we can replace the manager. It's not, you're hired to do this job. Other places I think are much more investment driven, and there is much more of a culture of, the PMs kind of run the show. And I think it, really depends on the organization and probably someone on the people involved. I think it helps now in our world, we are all reporting up to the chief investment officer. We're on the same team, and we're all trying to, create products that are, viable for the organization. And so when, changes need to be made, then it helps, I think, if you're playing on the same page and not, in more of a competitive situation between them. But definitely, I think can be tension, and probably more tension in some firms than others.
Yeah, that's a good point. I mean, I think going back to, I was saying, the functions exist everywhere. So I think that you have some legacy situations where the investment team is more involved in the product work. And then you have some where maybe that was led more out of the executive, the C-level office, the roles within that firm. And I think where it becomes more challenging when the investment folk, when they felt like that was their responsibility, it's hard to let that go to somebody else. But, this is a group probably right here where you're looking at having your CFA is going to help there, certainly in establishing that credibility and making some of those decisions or working through them.
Yeah, I mean, that's interesting with your product being, mutual funds or services, because, every company has product management. General Mills has a product manager for Cheerios. There isn't, the same tension because it's an inanimate product and they make the decisions, but when you have people involved, it's, very different deal. But certainly get the opportunity to develop, some, collaboration skills and, get together managing through tension. Any other questions from that?
So what do you measure on? Like, is it overall company P&L? Is it like, if you're killing products, is it like net investment returns? Like, what do you?
Yeah, I mean, primarily, at firms I've been at, I've either reported into distribution. Distribution sales is kind of simple, but distribution, if you're not familiar with that term, is
Basically, your asset management for retail.
yeah. So I've either been in the distribution or into the CEO's office or the executive office. So it ends up being tied to the growth goals, sales goals typically.
Yeah, and our, the compensation plans, change over time. We've done it differently over, my time here. We are paid, predominantly on the firm goals, and they're driven, mostly by assets under management, new customers, net flows. We aren't, I haven't ever been, my performance hasn't ever been tied specifically to the performance of the products, but just kind of the firm-wide assets under management and net flows.
Yeah, that's if your question is if your product underperforms its benchmark by 10%, is that going to impact your comp? That's not that hard. That's typically where you have the investment team has a certain comp structure, and the sales are going to have a commission-based comp structure. Right. So you kind of sit between that, where obviously if the products perform really well, the firm goals are going to be, you're most likely going to exceed firm goals. If the salespeople are selling really well, you're going to exceed firm goals. So that's going to impact your comp.
I mean, and in this business, we generate revenue from our assets under management, so that's, overall the firm model, that's what, provides the revenue to pass on, in one way or another.
How much time do you guys spend on competition research? In other words, how much time are you spending analyzing how competitors' products are doing versus your own products?
Quite a bit. I mean, I don't know. I want to say just top of my head, that was 40% at times. I mean, if your product's very active in the marketplace in terms of engaging with potential clients on a product, yeah, big part of the role.
And I'd say, I'll kind of get into how our time is split. We don't spend as much time on competitive research as we would probably like. We do, especially if you're, providing, sales support and there's more, need to do like head-to-head comparisons, or there's certain funds you're, competing against, spend more time in that way. But they're also, doing some of the market, the market intelligence and competitive intelligence is, certainly important for the role, but I definitely wouldn't say it's 40% of my time.
Yeah.
I don't know, Jeff, and my team, I don't know how much time they spend probably doing more of the research, but.
Yeah, a lot of our probably competitive research comes up because we also manage our some managed account programs, so we're using Thrivent mutual funds and other mutual funds, so we've got a pretty good feel of what's going on in the landscape. But like our sales structure here at Thrivent for years was through a captive sales force, so we didn't have a lot of direct competition for our mutual fund products. That's been changing, and that's been kind of changing how we have to look more at working better.
And I would say there's a difference to it protecting, like, head-to-head individual fund comparisons, my large cap growth fund versus this one, or if you're talking, firm level, how would we compare to, Oppenheimer? I would say we probably do less of that, but sometimes that is part of from an executive comp, looking at, flows at the firm level, looking at assets, looking at, margins, that's all, kind of part of the analysis that a mutual fund board looks at too.
Would you say that your role is a little bit more proactive in the sense that we notice that investors are looking for passive vehicles like ETFs, so we should launch ETFs, or more proactive by anticipating such a trend where you would see, oh, maybe we're charging a little bit more over in terms of fees, maybe we can do it via an ETF and have a cheaper vehicle for investors?
I'd say and I'll kind of get into how we do some of that when I get through my slides. I'd say, it's a little bit of both. We're trying to get to be more proactive, I'd say. Certainly, the default is probably to be reactive to things that are going on and what you're hearing, but, the desire, I think, is to have a more proactive approach.
Yeah, I think that it's around providing feedback. Proactive feedback is definitely a big part of the role in terms of being aware of where those opportunities are and the trends in the market. Now, it just kind of depends on the intentions and the plans of the firm, whether you're proactively taking part in those activities. That's right. Not everyone's ready to launch an ETF tomorrow, and it's not part of their firm direction, business plan. But you can always, I think that it's always a responsibility to be aware of those trends and share that feedback. I know, for example, one good example I give is at Columbia, they have sort of a scorecard for their strategies and their funds, and they always just compare it to the fund, Lipper groups or Morningstar groups. They actually added in that in their analysis the low cost ETF. So how do you compare to your benchmark, how do you compare to your peer group, and how do you compare to the low cost ETF? So it's something certainly they're aware of, and firms are aware of. So that's definitely the proactive side of it, is awareness and feedback.
All right, well, we're going to kind of go backwards and talk about my background. So I've been in the industry over 20 years. I started working at TCF when I was in high school, worked there kind of through college, and got an internship at Sit Investment on the mutual fund desk. So I answered the phone with client calls, people calling up for NAVs and prospectuses, and answering a lot of questions that you have to quickly go on hold and find answers to questions. And worked with the marketing team a little bit, so I worked there for about like my junior and senior year of college, and then so really I know nothing but financial services. I've done this my entire life basically. When I graduated, I got a job on the trading desk at Cronin & Company as a small municipal bond trader. Worked as a trading assistant, and relatively quickly realized that my future was probably not as a trader, and so then I moved over to American Express Financial Advisors. Worked on what was kind of an early generation wrap product called Wealth Management Service. I worked there as I was getting my MBA at And while I was there, I just got an opportunity kind of through the Career Center to become an investment analyst for the Minnesota State Board of Investment. So I started there actually before I finished my MBA, and I was an investment analyst for domestic equities for the state pension and 457 funds. And so that was a role where we selected and researched and monitored all of the asset managers that managed that money. We had about 20 billion in domestic equities at that time that I was responsible for. And then because we were a public plan, we had kind of an open door policy where we met with, really any investment shop that was coming through. So that was, a really great way to learn about, kind of all investment strategies on the domestic equity side. I didn't, realize or appreciate at the time, what it was like to be that large of a client. We had, we had about 20 billion in equities, so we really couldn't allocate less than 300 million to any manager. We preferred, to have allocations in the 500 million to a billion range, and I think our largest was like 3 billion. And so I just, kind of thought that was the way it was. I was 24 and I'm a client, $1 billion client, and you fly out to, Barclays or the CIO was meeting you, and I just thought this was how it worked. But later, I worked for General Mills, and our allocations, we were more like a, $5 million, $10 million client. It's actually quite a different experience, but it was really, great learning experience. And at General Mills, I was in a similar role. I worked as an investment analyst on the pension and 401k plans. And there, though, we had, a much smaller staff, and we had some other kind of benefit finance responsibilities with needing to do, stuff in like the General Mills report for the pensions and that reporting, and there were some other, I would say, other things that we had to focus on outside of just managing and monitoring managers. But so I did that for the first few years of my career, and then actually this was in the late 90s. I had my resume on Monster.com, and I got a call from a recruiter for a product management job at US Bank. So I was not, looking for product management. I probably never heard of a product management role, but went in and interviewed, and it ended up being, really great fit for me because, I'm analytical, but I don't really enjoy, the financial statement analysis and the spreadsheets. My undergrad and my MBA both had concentrations of both finance and marketing, so this is really kind of a good split between them. And so I, really just found that job, like just kind of wasn't even looking, got called by a recruiter. The person that hired me, his name is Dave Spangler. He's still here at Thrivent today. Dave subsequently left, and he ran product for Wells Fargo in San Francisco, and I had stayed at US Bank or First American Funds, and then Dave came back to Minneapolis and was running product here, and he brought me over. So that's how I came to Thrivent, and I've been here now for almost 15 years. Dave is still here, but he moved on to the investment department. So he is one of the probably relatively rare cases where someone does make the shift from product to investment management. He moved to the quant group, and then now is in an investment strategy group that does the asset allocation work from here. But I would say that's, I can't think of too many other people that really have transitioned from running, product to managing money, but can be done. So that's, sort of my career history, and then in terms of, what, so a couple people had asked, a little bit more about Thrivent or, who we are. We are a Fortune 500 company, so we're bigger than you might think. We're a not-for-profit financial services organization, so really different orientation here than a public company that's just managing day-to-day share prices. But our corporate headquarters are here in Minneapolis. Our operations center is in Appleton, Wisconsin. We are the kind of combined company from Lutheran Brotherhood, which is in Minneapolis, and Aid Association for Lutherans, which was in Appleton, and we merged in 2002, I believe. And so we still have, a good percentage of our equity team is still in Appleton. People that were former AAL investment people remain there. The former LB people are here in Minneapolis, and new hires can kind of go to either location. We've got about, I think, around 1,500 employees here in Minneapolis, and there's probably another 2,000 or so in Appleton. So we're a faith-based membership organization, but our mutual fund product line is a separate subsidiary. It doesn't isn't actually faith-based. So or like health and annuity company or fraternal benefit society, one of the things that is unique about Thrivent is we're a fraternal benefit society, which means you have to have a common bond to buy our membership product. So the common bond was the Lutheran faith for the first 100 years or so, and then in 2013 we did a proxy with our members and voted to expand the common bond to the broader Christian market. So Thrivent's life, health, and annuity products are only sold to people who identify as Christian. But the mutual funds and other investment products are a separate subsidiary. They've always been available to everyone. So we are the nation's largest fraternal benefit society. We have about 2 million members. And we have about 200 and some billion in individual life insurance. So that's kind of what most people think of when they think of Thrivent is our life, health, and annuity products. The pie chart, we've got about just over 120 billion in assets under management, and about half or so of that is in our insurance company assets. So that's the assets that are backing up our life insurance or disability. With life insurance is the main thing, but also our variable annuity business. Then we have mutual funds. That's about 18 billion. We have about 24 funds. We have a variable annuity or variable portfolio business, which is variable annuity and variable universal life, and that's about 32 billion. And then we have these discretionary managed accounts. So that's mutual fund wrap, where the client has given the discretion to us to manage those assets according to a model. So we run their asset allocation strategies, and we select the funds and ETFs that are used in those products. So those are a mix of Thrivent proprietary mutual funds and non-prop funds and ETFs. And then separately, there's the rest of our managed account and brokerage assets. So the products that we focus on are the mutual funds, the VA and VUL insurance portfolios, and then the discretionary managed account programs. So my team is here. Jeff and Amir are both also charter holders here, so they can also answer questions. Feel free to ask what their experience is as well. But we report up to Vice President of Marketing, Distribution, and Sales. He's actually marketing, distribution, and sales of mutual funds, not of our life, health, and annuity products. That's a separate division, and we report to David Royal, who's the Chief Investment Officer. David reports to Brad Hewitt, who's the CEO of Thrivent Financial. And we're a really small team. We're structured as generalists, so we all support all asset classes and all products. We aren't split by, one of us covering mutual funds and someone else doing VA. Those are sort of mirror product lines anyway. And then we all, I think, kind of like to have our hands on everything. There would be benefits maybe to specializing more in some way, so that could evolve over time. So we really group our work into kind of 3 main buckets. And at a larger company, this would be probably 3 separate departments. But we're fairly large, but then when you compare us to like a Vanguard or a Goldman or an Oppenheimer, we're infinitesimally smaller. So but we kind of manage all these things within our team. So product management, product development, that's what our team is actually called. We develop and implement product management strategies. So that can be new product launches, launching new mutual funds, or new it could be a new like a discretionary managed account product or a new variable annuity sub-account. We aren't responsible for the VA contract, so we're not running the insurance side of it, but we are responsible for the products that are used within the VA. There's also just kind of managing the product line, so deciding that this fund is no longer competitive, or it's not earning enough money, or it's the track record is too poor, so we might do a fund merger. We might change the name of a product to kind of repurpose it into something else. So there could be investment strategy changes or name changes. And then part of this again is the competitive monitoring, and then we're also responsible for making board updates and recommendations. Whenever any kind of product change like this is going to come through, we're going to be responsible for kind of getting the organizational buy-in across all the different departments and getting the executive leadership sign off, and then writing the board recommendations, presenting it to the board, and then working with the implementation team that kind of makes these things happen across Thrivent. So we, as Marc said, we really do collaborate cross-functionally across the entire organization, and we serve as a business owner for all product-related initiatives. So, really anything that is, that affects a mutual fund, that's our product, we sign off on it. So whether it's, something to do with the website or, pricing, we, kind of have input and sign off on all of those things. So we work really closely with, legal, compliance, marketing, with their senior leadership. We're closely connected to the investment teams. I tend to work, more closely usually with like our head of equities and head of fixed income than the individual PMs, but definitely interact with them as well. And then we work, closely with our sales and marketing teams. So, in many places this is, one department, that's one job as it is, but we also do the manager research and due diligence. Part of this is because of my background, having worked, in manager selection at the state and at General Mills. When I came here and we were doing sub-advisory, it kind of makes sense for that to fall in my team. So we select and monitor the external strategies that we use. So right now we're covering about close to $5.5 billion, and this covers actually more than 50 active strategies if you include the VITs. So that includes, we have about $3.5 billion in sub-advised assets. So that's where we have hired another firm to manage assets in one of our mutual funds. So we call them our partner funds. Like for example, we have a partner worldwide allocation fund where we have several sub-advisors that run different asset classes. And then we have about close to $3 billion in the discretionary management account program. So that again is the mutual fund graph where we're selecting non-prop mutual funds and ETFs. And then we also have about 35 variable insurance trust or VIT strategies. So those are similar to a mutual fund, but they're only available within a VA, and we use these in a new product that was launched last July called Advisor Flex, which is an investment advisory VA. So in this case too, I'm connecting both with more the institutional separate account teams that would do sub-advisory work, as well as the kind of national accounts teams that usually cover the mutual funds and ETFs for the firms. And then the other, I would say, big part of our role that it takes a substantial part of our time is the sales and marketing support. And we've had, and this was really similar when I was at First American. The product group was structured similarly. We only had a couple of sub-advised funds, but that work was done within the product group. We did the product management and product development, and we also did all the sales and marketing support for the wholesalers and the sales teams. And there was, at one point there wasn't a separate marketing team, and then there was, and then I think they went back to that model. And the same has been here at Thrivent. We've kind of functioned as two separate teams, and for 4 or 5 years, marketing and product was all part of my same team. We've now expanded. We've brought in several new marketing people, and so we now have a separate marketing function that also reports up to Troy, but we still provide the subject matter expertise for them. And so we really support our wholesalers and the sales team and the call centers and really anyone else internally that needs subject matter expertise on the product. So whether it's explaining performance or explaining an investment strategy, we develop the pitch books and sales profiles. We really provide the content that would go into these marketing pieces. We help support sales and the national accounts teams and completing RFP responses. We really review and approve all the marketing collateral to our products. We have to sign off on everything. We help develop performance talking points, so that's usually working with either getting information directly from FactSet or working with the portfolio management teams to understand performance and be able to communicate that messaging. I know Jeff and Amir spend a lot of their time responding to wholesaler and FR questions, and just explaining the product and performance and positioning and competitive intelligence versus other products that our wholesalers might be coming up against or that other FRs are using. And then whenever there's any product-related changes, we need to communicate that. So say we're changing the name of a product, or we're doing a proxy, or we're changing a portfolio manager, we're kind of responsible for driving the communications plan of that. We have communications people also at Thrivent, but all the messaging has to be driven by product. And then just also helping to interact with the senior investment professionals and share those viewpoints with our sales and marketing teams. And then this is just kind of a picture of what we're calling our product development pipeline. So this gets to the question earlier of how do we decide what we're going to do. And I think this is, sort of the ebb and flow over time as well, but there's, often in a firm that's more driven, I'd say, by the investment team, some of your product decisions might be more driven by the capabilities that you have. So there might be, you have a portfolio manager that would, they would like to extend into the small growth space, or you've got good capabilities on this team and you can do floating rate, or so some of those, things could drive up and, hey, we've got someone who can do this, or we even want a product. We're trying to, still take into account our capabilities, but also be a little bit more market driven and find out, what do our sales and marketing people, what are they hearing, what do they need? But also not just, launching whatever they want without, to figure out if it makes sense and if you have the right capabilities internally or if you need to develop capabilities. So kind of implemented a process where we're trying to be more, just a little bit more formal in how we go about this. We have a monthly meeting that includes representatives really from all the major functions. And we have kind of the ideation or backlog stage really where we can take ideas from anywhere. So anyone who has an idea about something we should do or could do, send it to us, we'll put it in the backlog. We will kind of bring it forward at this meeting. We have, a long list right now of here's some things, we could do or we might want to do at some point, but we're only going to probably move, one or two of those ideas forward at any time. So through this group, we will say, okay, you know what, this, maybe this is a good idea, but we're just not ready to do that right now, but this one, let's, this aligns with our strategic priorities and what we're trying to accomplish this year, so let's try to move this idea forward. So we're now, trying to get buy-in from our, senior leadership, which would include like our chief investment officer, the head of equities, head of fixed income, our accounting and legal, and like this is something that's worth us spending some time doing some preliminary assessment. We'll come back to the group and then we'll say, okay, do we still want to move forward with this? If it is, we'll complete a more full assessment. So that's, looking at the sales opportunity, looking at the capabilities that we have internally, looking at, assets and flows in the market, and if we think we can compete in this space, and if this is, an area that's gaining traction, then we will move it forward, write a recommendation, get the management approval, and then bring that forward to our mutual fund board. And our board likes to do a two-step process. So they really want to see your recommendation at the first meeting, ask questions, kind of think about it over a course of a quarter. They might have, okay, well, that's interesting, but come back to me with this, this, and this. They can think about it for a few months. They want to see it again at the next meeting, address any questions that they kind of came up with as they thought about it for 3 months, and then they approve it, and then we move on to implementation. And kind of depending, if it's, you need at least 60 days to file, so kind of quickest you could do it would probably be launch something 60 to 90 days after you receive formal board approval, and sometimes the process might be 6 months or so, kind of depending on timing of all the different filings. So that's all I had with my slides, but any other questions?
Kristine? Jay?
At both your firms, I'm just curious, how are you, forget CFA guy's name, but integrating and thinking about ESG, is that important to your shops? Not, you're evolving, kind of what's the sentiment around that?
Sure, you can answer that.
It's definitely a big initiative for Columbia Threadneedle. They've hired people specifically to, implement that as part of the sort of investment. They want to weave it into the investment process, is the way they're going about it. So it's sort of like they're not touching the investment teams and necessarily saying, you need to think about ESG starting today. They're creating, if you will, a functionality within the firm where they can access information related to ESG to incorporate that into how they're considering making investment decisions. So hiring, there's some data providers out there that give you pretty good information on the companies that investment teams are looking at, like ESG scoring and things like that that are more measurable for them, to incorporate it sooner than later. I think it takes a long time for guys to maybe, the thing we always hear the most is that Well, we've always taken ESG into consideration, and I think that what's happened and why they created a separate function is that that's not the easiest thing for investors to understand. And when they ask the question, how are you incorporating ESG into the process? So just trying to do it more formally, and yeah, we're doing it sort of as an independent function, and then through systems, we can get into what we're doing on the investment side.
And for us, it's a question we hear a lot, especially being a faith-based firm. There's, I'd say, many people that assume we are doing something. The predecessor firms prior to the merger, one of them did social screening, so screening out sin stocks like alcohol, tobacco, pornography. The other one did not. When we merged the fund families, we had made the decision that we were not going to screen, and so we haven't had screen funds really since the fund families merged in 2004. We did offer a socially responsible stock and a socially responsible bond portfolio starting in 2008. They really never gained traction. We ended up merging them away with more assets, really $5 million in assets in each of them. But certainly now we're hearing a lot more about ESG, and especially as firms are kind of repositioning for requirements in Europe. They're building out ESG capabilities, and I'm hearing a lot more about it. I'm hearing more about it from some FRs and clients. But we're trying to figure out what we're going to do there. We've actually been in the midst of doing quite a bit of research. We surveyed about 400 of our financial representatives, and we just completed a survey of 2,000 Christian investor prospects to try to get their views on, get their views on it. We're still kind of in the midst of analyzing the results, but what we're seeing is that there's probably say 20% or less of people that are really interested in this, 20% or so that are not interested at all and do not want you to apply this to their portfolio, and then a bunch of people in the middle that could maybe go either way. And so we're working through this, trying to figure out if we want like an individual standalone product or two that would be screened. It could be either more of the positive, best in class, more environmentally and socially and governance, better scoring companies. It could be the negative screening where you're screening out the adult entertainment and private prisons and that kind of thing. It could be a combination of both. We're trying to kind of see, take the temperature of our field and Thrivent, actually this kind of impacts Thrivent overall, and so we're working actually with communications and our CEO and more broadly what should our view and our position be on some of this, and we're I'd say still trying to figure that out. One of the challenges, we just met with someone yesterday again and talking about just the data that you get from different providers. So MSCI and Sustainalytics are two of the main providers. I've heard at one point someone did a study that their data is actually negatively correlated. The person yesterday told us there's a 0.29 correlation between the scores, from the two providers. So that makes it, pretty challenging to figure out what to do if you're getting, actually, different results at different scores. And so, and certainly we're seeing a lot of, product proliferation. I don't know that we've seen a lot of, uptake or flows into these products yet. So.
Kristine mentioned kind of how it works at Thrivent, how we're kind of changing the market. Your experiences, has new product development been driven more by what existing capabilities your firms have, or what market opportunities are there?
So Columbia Threadneedle actually created an independent product development team in the last 5 years. And I'd say that the primary objective of that team has been to try to capture trends. So new capabilities has been their goal. When I had been at places where it was more of a hybrid role, I'd say the focus tended to be more on expanding the opportunities for existing capabilities. And if I were just to comment on it, I think that's where there ends up being a little more success. In uptake, I mean, it's just very difficult to catch a trend right, and in addition to that, to do something that you're not known for. And I think that that's always an interesting part of the product role. Is, it's kind of fun when you take those risks you know, and it's risk on both sides. You know, you say, we're good at this, can we expand it in a different way, or look at it through a different lens and offer an extension product? There's risk in launching that, it's not as successful. So, you know, I think that risk can be kind of fun and challenging.
And from the other side, we've had concerns with some of the boutique managers who've used in other products when they have decided to extend. That's taking focus away from, you know, what you hired them to do, and so that isn't necessarily going to be viewed positively by everyone. If your, you know, if your developed markets team is now, you know, distracted by emerging markets, it might be more sales opportunity for them, but not necessarily good for the, you know, kind of core product.
Yeah, I think it's kind of interesting when you think about the industry. You know, there might be, I think that's where there, you know, you see big shops and a lot of the assets are with some of the big major players. But I think that's where there's opportunities for new firms to launch. Is that there is definitely a lot of innovation and interesting ideas in the industry. And sometimes it's easier for a new firm to launch based on, you know, a new idea than, you know, an old legacy firm getting into that space. So I think that's kind of something I look at, you know, when I look at a competitive landscape, and, you know, kind of seeing someone I haven't heard of see some success.
And you were worried that you were going to run out of material. Thank you very much. Help me thank Marc